Hello, listeners, and welcome to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me on the podcast for our usual weekly market roundup is Rob Larity, our Chief Investment Officer. Before we get to the program, a brief note. My wife is pregnant with our first kid, and she is due at some point next week. So we will probably have a weekly podcast next week. I've been working hard to record some episodes so that you guys have content while I'm off in babyland taking care of my daughter. It's all becoming real. It's crazy to say that. But there's a small chance that I won't make it to next week for next week's weekly episode. So if for some reason I don't and there's no weekly episode next week, that's why, and I will hook back up with you guys in a couple weeks afterwards, and I hope you enjoy some of that content that we've pre-recorded while I'm out on my paternity leave. But the plan, knock on wood, and as we all know, babies have a way of making plans obsolete. There's that old phrase that making plans is a good way to hear God laugh. But the plan, at least, is that we should have a weekly episode out next week, and then I will take 2 weeks off before I rejoin you. So just wanted to give you that heads up. Otherwise, if you're feeling happy for me and want to congratulate me, this is a good time to go, yep, you guessed it, rate and review the podcast or send it to your friends. We're up to 50. That's incredible. My goal is to get to 100 ratings by the end of September. So if you haven't rated yet, I know that there are many hundreds of you who listen on your iPhones or on Apple Podcasts. If you could just go in and hit the 5-star, or you can hit whatever star button you want. I'd prefer 5 stars. I assume if you're listening to this, you like the podcast. But go in, hit the stars, give us a rating. It helps us so much and just takes a couple seconds of your time. Last but not least, if you want access to the Global Sit Rep, which is the weekly report that I write at Cognitive Investments, you can also get access to that if you want. Hit me up at jacob@cognitive.investments if you want access to that or anything else is on your mind. So enough from me. Cheers. Take care of each other. I will see you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. Rob, we're back at it for another week. How are things in Boston right now? Is the weather nice for the 2 weekends out of the year that it's supposed to be nice?
Well, thankfully the weather is not nice, which is real relief because it's been just excruciatingly hot for the past 2 weeks, and now it's rainy and cool and it's wonderful.
Well, I'm glad you're feeling refreshed. God, I just keep nailing these unintended segues because you know what else is feeling cooler than we thought? The U.S. CPI and inflation figures. Yeah, I just really nailed that one. So why don't we start our sort of overview of markets before we get into some other niche, nerdy topics with the CPI print and what you see in markets this week?
Sure. So as everyone knows, the CPI print was lower than expected. And just to tie it to what we were talking about last week, because last week we spoke about what is the debate going on in markets right now. And that debate essentially boils down to people who are focused on interest rates, who have been very hawkish and saying that, markets are underestimating the extent of inflation, are underestimating the resolve of the Federal Reserve, that talk of a pivot to a more dovish policy is way premature. And, last week we sort of went through the reasons why we thought that was a flawed view. And it did, in fact, turn out that, the data came in lower than expected. Interest rates expectations have really dropped. Bond yields have dropped. And like we said last time, all of this is like a pressure release valve on risk assets across the globe. So emerging market currencies, for example, which all bottomed on July 15th or around there, have really ripped in the last few days, in the last week. The Brazilian real has gone from 515 to 505 or thereabouts just in a few days, from a bottom of 540 a few weeks ago. So you can really see there's an impetus behind everything that's higher risk, internationally oriented, high beta in the lingo of investing stuff, and that's continuing. And the real sort of issue right now is the pushback on markets is everyone is saying, oh, well, this is a bear market rally or it's a short covering rally. So what I mean by that is people are saying, well, all the junk is the stuff that's leading now. So it's just shorts are rushing to cover. So they're squeezing these prices up and it's going to be short-lived. That's one line of argument. And the other line of argument is, well, it's a bear market rally. It's a bear market rally. We're in a bear market. Stocks are going to go down. You have these temporary things. I don't need to do anything, whatever. That's been the argument for the last few weeks, to the last month, as the market has bottomed and started to really run. And the fact that people are still making that argument probably shows you that we have a long way to go. Really, when people start to say, oh, it's the new bull market, it's the new era, we're off to the races, it's all clear, everyone come out of the bunker, that's when the bear market's going to continue and, we'll be down another 20%. But for right now, the sentiment is definitely not there. And not to get too into kind of weird psychological market stuff, but we had an interesting conversation at our research meeting a few days ago because we kind of doubled down on some of our long bond and long foreign currency bets ahead of the CPI print. And we had a internal discussion and not a disagreement, but a debate about whether that was a smart thing to do. And one of the things that came out of the debate was, there was a point of view raised that we don't want to get in front of this inflation print. It's very risky, and there's a lot of merit to what the interest rate focused people are saying, that the Fed is going to be more hawkish than we think, that inflation is going to prove more durable than we think, and all of these sort of arguments. And I think the counterpoint to that, which I think holds some interesting lessons for listeners who are interested in investing, is very rarely, in my experience, do you see the market giving you a false signal about a trend that's long in the tooth. So what I mean by that is everyone has known about inflation for over a year now. Like the market, that's been the story, that's been the narrative. Everyone's known about interest rates going up and up and up, and how far will they go up? And when the market starts to tell you, even before the data really turns, like, hey, the narrative is changing here, very rarely are you on the right side when you're sticking to the old narrative and saying, well, you don't realize it's going to be worse than you think. And like, that's almost always a position that doesn't end well. And you have to, which isn't to say that markets are all knowing and that markets can't give you false signals, because the opposite side of that are where there's cases where the market doesn't realize something indeed, but more often that's where there's some new piece of information coming, some new regime. And 2007, 2008 is a good example, which we discussed, which is a period where, in mid-2008, markets were rallying throughout the summer, commodities were rallying, and there was sort of this slow recognition that something was emerging to just clobber the economy and clobber the markets. And you could really have been fooled if you were there in the summer of 2008 and looking at some of the consumer names, for example, that rallied in August of 2008. People were saying, oh, we're off to the races again. It's all clear. The little mini recession is over. I don't know if I'm explaining this well, but my point is, when there's something new, like picture a movie and then like in the background, there's some creature just emerging from from your peripheral vision. Like that's when the market can be really wrong because it's not focused on something. But when the market is really focused on something and it starts to tell you something that's different, and you're arguing, well, the market's not focused enough on this thing that we've all been paying attention to, then that's a much trickier prospect.
Am I right to say that you're expecting then that the next CPI print will also be lower or surprise to the downside, or would a higher print sort of start to attack some of the foundations of the narrative you're laying out here?
Well, I don't know exactly what the expectations are for the next CPI print yet, because that's a ways off. But I think the relevant thing is markets are now going to turn their attention to the direction of CPI and not necessarily the magnitude. So whether it's a beat or a miss, compared to expectations, I don't think in the grand scheme of things that's so super important. The narrative now is, okay, inflation has peaked, and we don't know how long it's going to take to get back toward normal levels, but it's moving in that direction. So in many ways, direction is more important than magnitude when you're dealing with these things. The counter argument to that, which people are making now, is, okay, well, all of the energy related components of inflation, all of the inventory related components of inflation are deflating, but labor inflation, services inflation is going to remain persistently high. And that, I think, is where the debate is going to shift to. And the key indicators to look at will be, new unemployment claims, which came out today and continues to trend upward. It will be, what are service companies saying, hotels, restaurants, companies like that, about their labor issues. And we've been digging into this, and so far it looks like labor remains high as of the most recent data points, but it's not getting worse in those areas. Mm-hmm. So I would, if I had to take the over or under on service labor inflation, I would take the under, which I think argues for the under overall on CPI.
I did also notice, you're right that energy declined quite a bit. Food was still up. And it was up a little bit, like it wasn't, I think it was 1% or something like that. But that at least is still kind of stubborn. I think there are broader structural forces there. I think part of the inflation debate, like there's not just this thing that is inflation. Like we buy lots of different things, and it's an index of a lot of different things. So the energy prices being up 40% or 30% or whatever it is year on year is what's driving in some ways the CPI as high as it is. But even if you get energy to come back down to earth, but you get some of these other components in there, like maybe it's not about inflation, maybe it's just a rising food price issue, or like you said, maybe it's a labor issue. Like I feel like just the term inflation itself paints with a fairly broad brush.
Yeah, and it's going to take some time for the more recent decline in grains to start to flow through, because all of these consumer packaged good companies have been raising prices. They're not lowering prices, even though very recently their inputs have fallen through the floor in terms of price inflation. So there's a timing element to that as well.
Yeah. Okay, well, moving on, let's check in on, as listeners know, what we think is in some ways the most important thing happening in markets in the world right now, which is what's going on in China's real estate market. We should also touch on Taiwan and the geopolitics too. But Rob, what are you seeing in terms of whether the horse is drinking water, as you said last week? And by the way, I'm sorry, I don't mean to call the Chinese people a horse. It's just a metaphor. So sorry. I say that with all due respect. I like horses. Magnificent.
The wolf warriors are going to be coming after you.
Have you seen those movies?
No, I haven't.
They're great. I've watched them on planes. I'm all here for crappy Chinese action movies. In some ways, they're more. I love the ambiguous, not American evil guy, but he's got a goatee and he's got an American accent. It's great. I'm here for it all. Anyway, sorry, China.
Yeah. So China is a good subject to bring up, hearkening back to my earlier comments about 2007, 2008, and the market sort of only slowly becoming aware of some emerging risk. And I could see something similar here. We talked about how this is the biggest story that no one is really paying enough attention to. And I still think that's the case. Like, everyone is so focused now on what's going on in the U.S. markets with the CPI print. Europe, less so. There's not as much going on there, in part because it's August and everyone is, off on their month-long holidays. But the update on China is that there's really no update, and I find that concerning. There's no fundamental news out there suggesting that growth is recovering in property markets. And if you look at what Mr. Market is telling us, Chinese junk bonds are making new lows again. The price of iron ore, it's not rolling over, but it's not rebounding either. And if you look at how some other commodities, industrial commodities, have performed, recently with this whole like emerging market rebound, like copper prices are up, steel prices are up a little bit. There's been a bit of a tailwind there, but not for iron ore, and not for the stock prices of companies like Vale or BHP. And that's a little bit of a warning sign. And I think it's too early to say, oh, my God, run for the exits. But if you were to identify something that would introduce a new narrative and make people forget about, who cares what the Fed is doing because this is more important, I think that is the number one candidate right now. So still watching that like a hawk, but the horse is definitely not drinking. So that's the update there. What about Taiwan?
Well, with Taiwan, I don't want to say the issue has gone away, but the Chinese said that they were going to do military exercises until last Sunday. They extended that until this Wednesday, but then they seem to have paused military exercises for now. I think we'll probably see another round at some point soon, and they've reserved the right to do more military exercises. I also note that Taiwan had military exercises. The U.S. had a war game that the Wall Street Journal published. The Japanese had a war game that their newspapers published the results of. I mean, everybody's kind of fronting and posturing. The biggest posturing of all came from the Chinese government, which on the same day that they stopped their military exercises, and we'll see whether it was temporary or whether things are going to get back to normal in the South China Sea, they put out this new white paper on the reunification with Taiwan and what that means. And it's mostly a grab bag of Chinese propaganda's greatest hits, that Taiwan belongs to China since time immemorial, blah, blah, blah. But the end of the white paper talks very explicitly about how China's strategy with Taiwan is going to be to use the one country, two systems model that it used with Hong Kong and apply that to the Taiwan scenario. I've been saying, I said this in last week's SITREP, that I think that's the most likely scenario for Taiwan in the long term. I don't recall, and people can correct me if I'm wrong, I don't recall China being quite so explicit about, hey, this is what we're going to do. We want, like, this Hong Kong thing, that was a dry run for what we want to do with Taiwan. We want peaceful reunification, and this is going to be the method going forward. So I thought that was fairly telling. I looked past the propaganda and was sort of like, Beijing is telegraphing here that they want peaceful unification. Maybe that's to have people feel at ease, so that when they make a move eventually, you're not expecting it. But that's the only move that makes sense to me, kind of on a geopolitical level. But it's one of those geopolitical events where everybody was worried about it, and then unless you're a company that is actually is exposed to supply chains that are directly related to Taiwan and China, which if you're a tech company, you are. But outside of that, like, it looks like we're kind of calming down here from that point of view, and that China's moving on to thinking about other things. I think, to your point, though, it's been very hard to find updates about China's real estate situation because almost all of the English press is just not covering it right now. And you really have to go into Chinese press to still find information and data about what the local governments are doing to try and get the real estate crisis under control. So I wonder when the real estate crisis will come back into sort of the main narrative about China and displace the Taiwan issue.
And can you just remind me and remind the listeners, what are the catalysts? What are the important dates coming up in the Chinese political world?
I wish I knew the dates, but the big thing is that China's 20th Party Congress is coming up at some point before the end of the year. I believe the last one was in November, but it seems like they're signaling it might happen sooner. It might happen as soon as September. It's big because if the Chinese system worked the way that it has for the last couple decades, Xi Jinping would be stepping down and his anointed successor would be taking over. He, of course, didn't name a successor at the last Party Congress and seems to want to rule forever. So the things that observers are watching for is, will he name a successor? Is he just going to be Emperor Xi for as long as he lives? Are there going to be any signs of dissension within the Chinese Communist Party in the Party Congress? I think that's mostly wishful thinking. I think Xi is still pretty strong and has sort of eliminated discontent. But that, I think, is the big thing that everybody's watching. They want to see what happens in the Party Congress before they sort of move on to thinking on the next issue. So we don't know exactly when it's going to be. And I don't know how important the Chinese Party Congress is going to be. For you and me and for CI, it's only important if we're wrong about Xi and there is some kind of evidence of factional infighting within the party. If he did name a successor and a clear timeline for his stepping down, that would be really interesting. We'd have to stop and digest that and think about what's really going on there. So unless that happens, I'm honestly not so focused on the Chinese Party Congress. I think that's mostly window dressing. It's the easy narrative that people can latch onto without thinking about what's actually going on underneath the surface. I did note, and this was one thing I've been saying since the Taiwan thing started, and it came out today, that the Biden White House is now reconsidering its move to maybe withdraw some of Trump's tariffs on China. So, I mean, if we're getting back to inflation, I think it would have been a big hit to inflation if the U.S. and China had some kind of mini truce on the trade front. It looks like the Taiwan crisis has killed any chances of that. That I think to me is in some ways the biggest consequence of what happened with Taiwan in this previous round. We were getting little tiny indications that maybe the U.S. and China could work together on trade again, at least on a small scale basis, and that's already out the window.
Well, according to the president, inflation is already back down to 0%. So we don't really need that, do we?
Well, I don't want to rag on him too much, but I mean, he does seem to have a very loose sense of what words mean and when to employ them. But all politicians do. He is not unique in that sense. He's just he's less subtle about it. I mean, the one where he was basically redefining what a recession was kind of like, man, how stupid do you think we all are? But on the other hand, there's plenty of evidence that we're all pretty stupid. What else is going on in the world, Rob, besides China, before we kind of dive into some nerdy stuff?
Well, I wanted to ask, we haven't really talked about this, but you've been writing a little bit about it in our internal knowledge platform. What's going on in South Africa with this Ramaphosa buffalo corruption issue? Have you been following this?
I've been following it not as closely as I would like, just because between the Russia-Ukraine war and the China-Taiwan issue, there has not been as much bandwidth as I would like to be focusing on some of these more important things. We've also been very trained in on Brazil that has elections upcoming. But it is really important because you'll remember that when former President Jacob Zuma was up for investigation, I forget what, I think that was last year, the year before, I forget. It was either last year or the year before. You had some of the worst violence in South Africa really since the 90s or even the 80s as a result of different factions within South Africa either not being happy or being happy about Zuma getting some of his comeuppance. So this is not directly tied to Zuma, but it's about governance and law and order in South Africa itself. And Ramaphosa, I think, projected himself as somebody who was going to come in and not be corrupt and clean up some of these issues and think more strategically about South Africa's future and be more transparent. And this Buffalo issue seems to be that, well, maybe not everything was so above board. It's very hard for me to read whether there's a real fire here beneath the smoke, whether he really is corrupt in the way that some people are alleging, or whether some of his enemies are trying to attack him and find reasons to discredit him, because he is thinking in some ways about major reforms to South Africa, which would be good for South Africa in the long term, but will be very painful in the short term, whether it's thinking about reforming the power sector or things like that. So I wouldn't say I have anything beyond that. I would say that, I mean, South Africa, like India, is one of those countries I go back and forth on so much, because if you just look on paper, South Africa geopolitically should be a rock star. And it's all of the sort of soft stuff, the political identity, social cohesion, entrenched power networks, political factions, all that stuff prevents South Africa from realizing its potential. So I haven't seen anything that makes me think that South Africa is going to overcome any of that in this latest bout of political drama. It doesn't seem to me to be that worse. It just sort of seems to me to be I was going to say horse trading, but buffalo trading as usual, sort of in South Africa's politics. But it's on the radar, and I would confess I have not dived quite as deeply as I would like to, just because of everything that's been going on in the world.
Hmm.
And we do have some South African listeners, so if some South African listeners want to tell me that I should take a closer look, please feel free. I appreciate the feedback. You can be nice or not when you tell me that. Some of you are, some of you aren't.
Yeah. Well, part of the reason why I ask is because we're preparing right now to launch our strategic wealth investment strategy, which basically is an international strategy that we're rolling out, where based in part on geopolitical analysis, we're going to be in or out of various countries. And South Africa in our draft was in. So I was just curious what your current thinking was, because it seems like the scales are tipped toward the positive in your mind, at least according to our notes.
Well, because fundamentally it's great. They have tons of resources. They have great geography. They're astride multiple sea lanes. They are not threatened by any immediate enemies. They're one of those few countries that can play in all of the different frameworks. I mean, Turkey is trying to do this on a much grander scale, but South Africa can be friends with China on the one hand, but the US still wants to hang out with them, and the EU has to deal with them. They also, I wouldn't say rule of law is great in South Africa, but it does come from the British colonial system. So it has some aspects of law and order that foreign investors at least feel comfortable in and feel like they can rely on a little bit more than some other sort of riskier places in the world. So like I said, on paper, South Africa has everything you want. And I think I haven't looked at this data recently, but if you look at South African equities, I think they have historically outperformed, in part because of, even despite all of the political problems, like when you have that many resources and you don't have to worry about somebody invading you and you're right on all the trade routes, like you can have really shitty policy and still do really well at an economic level or even at a company level. So it's more of a, like, in favor of South Africa in spite of itself. And if it ever got its act together, like, man, it could really kind of go a leg up more.
Yeah. And we mentioned Brazil earlier. Why don't we chat a little bit about that before we talk about Brazilian coffee stuff? Because I'm curious. I noticed the Brazilian CPI numbers, which came out not this week, but the week before, were way lower than expected. So inflation in Brazil is coming off the boil real quick. And I know there's a utility cost element to that, because Bolsonaro introduced this program to reduce utility bills. And I think that's in the number. But still, things seem to be looking fairly up. It's not clear if that's helping his poll numbers heading into the election, but a penny for your thoughts on what's going on in Brazil.
Well, first of all, Rob, you were the one who shared the, I think, is it the foreign minister or the economy minister who decided to say that Brazil doesn't give a fuck about the French, if we can quote him word for word. I love this trend in diplomatic talk where nobody's actually diplomatic anymore. All these diplomats are just starting to use curse words and use like sort of modern day language the way it's trickled in.
Well, actually, I don't think he said he doesn't give a fuck, because my wife will disagree. I think my French is pretty good, and my translation of the French article that I put on there was that he was telling the French to go fuck themselves.
Oh, okay.
Which is even worse, probably.
Well, it's important to be precise about these things. Again, Brazil has some things going for it in the long term. In the short term, the politics are terrible. There is so much uncertainty and volatility ahead of them going into this election, because, Bolsonaro is not doing well in the polls. He's been doing everything he can to try and get inflation under control. I think you probably also noticed like inflation seems to have peaked in Brazil, but they still hiked interest rates. I mean, it's up around 13.5% now, interest rates in Brazil. So I wonder if they'll come off the boil there a little bit. But Bolsonaro is not seeing any improvement in his poll numbers, and it doesn't seem like he's going to go into that good night quietly. So everybody is worried about, is the Brazilian military going to intervene? Is Bolsonaro going to try and drive his people into the streets? Those are all real fears. I have nothing to tell the listeners they shouldn't be scared about what's going to happen in Brazil's election cycle. If you go to the opposite end of the aisle, I mean, Lula's people are putting out articles about, we have a study where maybe we should nationalize some oil refineries, and we're thinking about this. And Lula himself, I remember he blamed Ukraine in part for the Russia-Ukraine war in an interview with Time magazine a couple months ago. So politically, there's a lot not to like in Brazil from sort of a volatility perspective. But everything is relative to a certain extent. So compare Brazil to the only real major power that is its competitor in the Southern Cone, which is Argentina. Well, Argentina is a complete and total dumpster fire. I mean, if Brazil ever wanted an opportunity to increase geopolitical influence and economic influence in the Rio de la Plata, I mean, Argentina just seems to look worse and worse by the day. So, and even with all the problems I just talked about with Brazil, they don't have any of those types of problems, the ones that Argentina is having. Brazil also has, again, sort of like the South Africa example, I mean, tons of resources that they can bandy about, tons of resources that they can invest and sell abroad. Their main problem is going to be going from a commodity-driven economy to moving up the value chain and investing in Brazilian innovation and manufacturing more things at home, which again sort of goes to the Argentina thing. Like, Brazil has a real opportunity here to be a leader. And the last time Lula was president, Brazil sort of looked like it was going to do that. Now, it did that as part of this BRICS formation with Russia and India and China, South Africa. I don't think that formulation is going to work quite well. But I think at a geopolitical level, Brazil has quite a number of things going for it. So I don't think that might not be pretty domestically. Like I said, I mean, there are some domestic issues Brazil's going to have to get through before we can get to the uplit pastures of geopolitical wealth. But I'm okay with Brazil, but watching very closely about what's going on with the elections coming up.
And do you think, this is getting to our dinner time conversation last weekend, because I suggested that I thought Lula was almost like a Biden figure in the sense that it was a rejection of kind of the craziness of Bolsonaro. It was a return to something that felt safe, that was associated with a good time, relatively good time in Brazilian history, and that he would be more of a transition figure to a new state of Brazilian politics afterwards, rather than representing some big shift in and of himself, and that he probably wouldn't accomplish a ton. What do you think of that thesis? Is that totally bogus?
I would confess to being more cynical about it. I mean, if you go back and read the papers before Lula became president, like, everybody thought the sky was falling too. And then Brazil had a really great period because there was some macroeconomic stability, and for all of his corruption issues, like, he sort of steered the ship well. But I don't think Lula sees himself as a transition figure at all. I think he sees himself as somebody who was wrongfully, the system went at him wrongfully for these corruption issues, and that he sort of is going to get a second chance at the wheel. Biden, I mean, we'll see if Biden runs again. The debate here in my house for the last week has been, is Biden going to run again? And is he actually going to try to be the transitional figure? Or does he believe this sort of vision of himself as somebody who's going to be more than a transitional figure? I can't explain why this is happening in democracies, but I view it as a net negative sign that we keep on just going back into the bag of old leaders. It almost feels like like, you know how you feel stagnant when there's no new Netflix shows, you've watched all the shows and you just want to go watch again the same show that you've watched like 500 times before. It seems like politically in democracies we're there. It would be better if there was some young blood that was articulating real vision about what Brazil's future is going to be. I would view that as more positive for Brazil. I would view that as more positive for the United States. I mean, we're talking about, if Biden runs again, and let's assume Trump wins. I mean, this is like, what, two late 70s, two 80-year-olds duking it out and to rule, to have the nuclear codes and rule the most important country in the world. No offense if you're over 80 years old out there, but like, you're not supposed to be president of the United States when you're 80 years old. Like, it's not a great look. So I don't think that your argument that Lula's a transitional figure and that he's going to restore stability. Sure, it's better than the dumpster fire that has been Bolsonaro, but it's not good. It's not good that the best Brazil can come up with is, some old guy who was accused of and convicted of corruption, and then the charge was vacated, whatever. But I mean, I don't know. It's looking backwards, not forwards. That doesn't seem to me to be a positive thing.
No, but I'm not arguing it's good. I'm just arguing that it doesn't represent. It just kind of represents a pause. Like there's going to be something new after him. Like I don't think he's going to, how do I say? I think a large number of Brazilians who previously, 10 or 15 years ago would have viewed Lula in very positive terms are now much more ambivalent about him and are voting for him because he's not Jair Bolsonaro. And it's sort of a safety play rather than, hey, he represents some new direction the country is going to go in, or, some new movement.
That's fair. But you're saying that after Lula, there will be something new. And it doesn't appear like you and I have talked before, not on the podcast. So we can talk about it now about how, there are some interesting similarities between Brazil and the United States at the political level. And they mimic each other in some very interesting ways. And in this in the way that domestic politics is happening in both countries, there are similarities between what's happening. But so you had, let's say, just look at the United States. If the United States is a leading indicator for Brazil, you had Biden as the transitional figure, but who's the Republican frontrunner? It's probably Trump again. And all the Trumpers are out there, and they're the ones that are dominating the conversation in the Republican Party. So let's say you have Lula as the transitional figure. He's not a bridgehead to something new. He's probably a bridgehead to a stabbed in the back myth from Bolsonaro or Bolsonaro's supporters, and we'll get some new right-wing demon. I always get uncomfortable with democracies where the person that is being put in office is only being put there because he's the option that is hated least. Israel's another example of where this is happening. The only reason... they had 4 or 5 consecutive elections because the only thing people could agree on was they wanted to be anti-Netanyahu. If you're in a political position where nobody is pro anything, where nobody can make an argument to the majority of people in the country that these are the things we should be doing, actively pursuing, that looks like stagnation to me. That doesn't look like a country that is confident or moving forward, at least at a political level. But there's also, and I'm rambling a little, but I'll also just say this is also where politics becomes somewhat meaningless because it doesn't really matter. Well, not that it doesn't matter. It matters less sometimes what is happening in the halls of power versus what's happening in the rest of the country. Just because, for instance, in the United States, politics has been gridlocked doesn't mean that the economy has stopped, doesn't mean that there hasn't been innovation and all of these other things that are good sort of on a net basis. So it's important and it affects things, but I caution listeners from putting too much stock in just what's happening at that top level. And I think that might be one area where the conversation that you were having in your house about Brazil, sure, I get it. At the top level, things are really scary. All the other levels, Brazil's doing great, especially relative to its peers and its competitors. So you can be depressed about the situation at the top, but that's part of what democracy is. It's messy and it's loud, and a lot of times it's designed to make sure that no one person can push things through. If you want that, go to China or go to Russia. They push things through all they want, but they sacrifice something else in the back end.
Especially when you look at Brazilian history, they don't have much of a history of raucous, competitive, back and forth democratic politics. It's usually been,
military dictatorship.
So this is in many ways a good thing. As ugly and nasty and messy and stupid as it is in many ways.
If it holds, because the concern about Brazil is that the military is having to leak to everybody who will listen, we're not going to intervene no matter how hard it gets. But what if Bolsonaro forces their hand? What if he tries to pull some sort of January 6th type thing? How far are they going to be willing to go? Who are they going to support? Bolsonaro's also been stacking the deck with loyalists and firing people that don't give him the answers that he wants. So, yeah. Well, before we end, let's talk about coffee and cocoa, cacao, chocolate. I haven't figured out how to pronounce it quite yet, but I'll have a few minutes to listen to you talk about coffee to figure it out. So tell me why you're thinking about coffee this week, besides from the fact that we need it to function.
So I think this is an interesting case study to talk about. So we just put on a pretty significant short position in coffee in one of our strategies for clients in Arabica coffee.
After we should say you had a very successful call going long coffee. What was that, a year? Wow, was that over a year ago? When was that?
No, 2 years ago. That was 2020.
Time.
Yeah, again, we always seem like we're patting ourselves on the back, and we get plenty of things wrong. But we were joking that we should just morph into a coffee-only investment firm, given that we seem to have a lot of focus there. So in 2020, it was a totally different setup. But I want to talk about coffee because I think it has some interesting things to think about, just about investing more generally, that the listeners might appreciate. So we were long then when coffee was in the low $1 a pound range, and now we've just gone short, and it's about $2.20 a pound. And what's the setup in coffee? So whenever we talk about what we do or the discipline of investing, we talk about, or at least I talk about, I'm using the royal we here, the three legs of the stool. And the three legs of the stool are, what are the fundamentals, first of all? Like, what's actually happening in the world? How is this business doing? How is this commodity doing in terms of supply and demand and all that stuff? So that's a huge part of what we do. The second part is, what is the market action telling you? What is price action telling you? What is Mr. Market trying to hint about those fundamentals and the future outlook on them, which is equally important. So if you meet a technician, they're a very rare breed now, but like a true technician wouldn't care about fundamentals. They wouldn't spend any time on it. They would just look at, what is the price doing, and I'm going to focus on that to anticipate and stuff like that. So those are the first two. The third leg of the stool is sentiment. So you have your fundamentals, you have Mr. Market, which is this disembodied, godlike thing that you're trying to read the tea leaves about. But then sentiment is, what is the other guy or the other girl? Let's face it, it's 98% other guys. What do they think about the first two legs of the stool? So how are other people positioned? What is the zeitgeist? What is the feeling? What is the psychology of the other participants in the game? So those are the three legs of the stool that we always focus on whenever we do anything, whether it's an individual stock or a commodity or, interest rates or gold, whatever it is. And coffee is an interesting setup because right now there's a very bullish story out about coffee. So when 2 years ago we were getting into this, there was coffee coming out of, everyone's ears. There was a massive amount of supply. So just for quick background, Brazil is by far the largest producer of Arabica coffee beans in the world. So the market sort of hinges on what they're going to do. Coffee is a biennial crop. So you have one crop year that's like a really big crop, and then the off years, it's like 30% less usually. So in 2020, you had a big crop year, and that's when coffee beans were coming out of everyone's ears. There was no reason to think that anything was going to change. We were just drowning in coffee beans. And of course, being the nutty contrarians that we are, that's when we got really long, and of course the situation did in fact change. But now we're back again, and we're back. 2021 was the small year, and we're here, and we're nearing the end of the 2022 crop, and it's about 85% harvested already. Now, the bull story that's out there, speculators are extremely bulled up on coffee, and the reason is because the inventory data at the exchange, the ICE exchange, which is where these contracts are traded, the inventory of coffee in the warehouses is hitting new lows. And people are looking at that and saying, oh my God, we're going to run out of coffee here. And at the same time, people are focused on the weather in Brazil because there was a frost earlier this year, which damaged the crop somewhat. So even though this is the big year crop, the size of that crop is pretty disappointing relative to other big years. It's still much higher than last year, which was the small year, but still you have a a weak crop, relatively speaking. But people have known this for months. This is not a new thing. The frost took place, a few months ago. So what traders are looking at fundamentally is they're saying, okay, we're running out of inventories. The crop is not great, and it's almost complete. And the other key data point is they're looking at cash prices for coffee. So there's futures prices, which is entering into a contract for delivery or supply at some future date. And then there's the spot market, which is, hey, you need coffee now. What are you going to pay to get it? And the difference between the cash prices and the futures prices has really widened. So if you want to go into the market right now and buy coffee beans today, you're going to pay a significant premium over the futures price to get it. So people are looking at that and saying, oh, the market's really starting to tighten up. We're running into a supply shortage. And so that's the background. That's the bull case. And I think it's interesting because, those are the fundamentals. And if you were to hear that story, you would say, oh my God, why don't I go buy coffee? This sounds like a home run. But that's only looking at the first leg of the stool, the fundamental leg of the stool. And the other two legs of the stool, I think, are really interesting because if you look at market action, the price action, the thing that's really notable about what's going on is that even with all of these bullish data points coming out, coffee futures prices have just been kind of piddling along. So they peaked out a few months ago now in the spring. And since then, they've just been kind of going sideways. They can't rally. They're just kind of bleeding out. And that's very noteworthy because if I were really bullish and I were doing all my analysis on what's happening in the coffee market in Brazil, then I would be a little worried because, hey, why isn't this showing up in the market? The news is out there. Where's the follow through? And that, I think, gets to the third leg of the stool, which is, just thinking about, and part of this is talking about how to incorporate this into your investing all the time, is you really have to think about what are the people on the other side of the trade? What are their experiences? What is their background? And the background here is that everyone has looked at the Russia-Ukraine conflict earlier this year. And anyone who's made any money this year, the way they've made money is by buying some commodity that then spiked because of Russia-Ukraine. So you have this event that's looming large in everyone's memory. And everyone is just so eager to find, well, what's the next one going to be? Because you have this pattern that you're seeking to replicate. And that seems to be the setup psychologically, because you have a lot of commodity speculators who are looking for the next shortage, the next bottleneck, the next thing that's going to spike, 60, 70% in a month, like nickel or, whatever you want to name that Ukraine was producing. So the story that's circulating is that we're entering another period like 1997. And in 1997, the story goes, you were experiencing the same thing where you were running out of coffee, inventories ran out, and you literally had a shortage and a massive spike. And that's what people are pointing to and saying, this is going to be where the next bottleneck is. And we're taking the opposite side of that. Of course, this is going to be famous last words because tomorrow you're going to see it spike 60%. But the reason is because stools number 2 and 3 argue very much against stool number 1. And I think the takeaway here is you can't just do fundamental analysis. You have to look at what Mr. Market is telling you. You have to take into account what is the positioning, what is the psychology of people on the other side of the trade. And let me tell a different fundamental story, because we've talked about this in the past where, we have a fundamental view of something and then Mr. Market is not confirming that. So, well, what's an alternative explanation? What's another way to look at the fundamentals? We spoke about this in relation to Turkey, where, you were saying, God, the fundamentals in Turkey are giant mess. And I said, well, Mr. Market looks pretty good. So how else can we think about it? And this is a similar thing. And here are some data points that, like, if you spin it a little bit, are kind of noteworthy. Like, so the inventories in the warehouses are supposedly, at rock bottom. But, through the bottom up work that we've done on individual companies and the fact that we're not just we don't focus on commodities at all. We do everything. Our work on businesses has made it clear that businesses have been stockpiling inventories, obviously, because they're scared they're not going to get their hands on things. And it's interesting because if you look, some of these companies, it's hard to get really good data on this, but look at a company like JDE Peet's, right, which is the company that owns Peet's Coffee. They own a few coffee brands in Europe, and they report it's a pretty clean coffee company. And in their last quarterly report, which they just did last week, they came out and said that their inventories were up 65% year over year, and their sales are up only 20%. So that's kind of an interesting data point because those guys are carrying a lot of extra coffee. And I just wonder, this is totally speculative, if some of those inventories are not in the warehouse, they're, being held outside, they've already passed through to the end consumer, and the end consumer is holding more than they usually would. That could be totally wrong. And if someone knows a lot about coffee, like, please inform us. But we're just seeking to find what is the explanation for the lack of market confirmation of this thesis. So that's kind of the story. And then, the other thing that's kind of interesting is from a fundamental standpoint. So as I mentioned, most of the harvest has already been done, but the exports of coffee from Brazil have been much lower than last year. So what gives, right? Like, this is the big crop year. Where's all the beans? And, they blamed it on supply chain issues and trucks and stuff like that. But part of it is, like, Brazilian farmers are in the market too. And if they're thinking, hey, there's no beans, there's going to be a big price spike, why the hell would you sell your beans now? You'd look like a fool, right? So there, from what I can see, there's some speculation in the press and journalists who cover coffee and Brazil stuff that some guys are sitting on beans that otherwise would have sold them through by now. And that's sort of an interesting dynamic because that's self-reinforcing. Because if coffee futures prices continue to roll over and you get farmers who are finally throwing in the towel, because there's a carrying cost to this, like, you want the cash now. Especially in a country like Brazil where interest rates are 13%.
Yeah.
And dollars are something that you want. Then if people start selling and throwing in the towel, that could really start a chain reaction, especially as the dollar continues to go down against the real, which, as we mentioned earlier, is happening every single day. So if you're a Brazilian farmer, you're sitting there in your kitchen on your laptop in Minas Gerais, and you're watching the value of the dollar go down every day, and you're watching the real value of futures prices do nothing to go down every day. At what point do you say, oh, well, let's just dump the remainder of what we have because, I don't want to wait anymore. So I don't know. That's just kind of an interesting story. And we're not coffee experts. We're generalists. So if anyone is a coffee expert and they want to pick holes in that, I'd love to hear it. But that's our speculation at the moment. And it's sort of an interesting setup. And it illustrates those three legs pretty well, I think.
Well, and so how about apply those three legs to what you asked me to look at closer this week, which was the cacao market. Because at the same time that you're thinking about short coffee, we haven't put it on yet, but we're thinking about cacao and cocoa beans and chocolate sort of from a more long perspective.
Well, this is still pretty nascent. But the reason why I asked you to look at cacao was looking at the second leg of the stool first. So I don't know if it's cacao or cocoa or whatever. chocolate prices.
I'm pretty sure that cacao is the raw bean before it's processed, and the cocoa bean is what happens after you roast it. That is what I believe is the case. So.
All right. We'll call it cocoa, just for cacao sounds pretentious.
It does.
So cocoa prices have been in a very narrow range for a long time, and they recently broke down below that range. And it looks like the fundamental kind of bear case out there is about demand. So I think there's a view that demand is likely to weaken because of a recession in Europe, recession in China, that sort of thing. So there's sort of that standard view out, and there's really been no major issues with supply in the recent past. And you have this breakdown, which looks like it might be a false breakdown, as we say. So when something is trading in a range for a long time, and then it breaks down below that range, usually a lot of technical traders will jump on that and say, oh, this is a huge event. But the corollary to that is when it breaks down and then it reverses back and goes back into the range, that's oftentimes the catalyst for something to really start to rip in the opposite direction, because everyone gets caught out. They get whipsawed, as we say. So that's what I'm looking at technically. The sentiment seems to be quite bearish on cocoa. And the fundamentals also look quite bearish, and you can speak to this because you did a lot of this work this week, but it occurred to me, cocoa is one of the most concentrated, geographically concentrated markets in the world. And there's some risk there. So maybe that's a segue into you sharing your work.
Yeah, it's interesting. So it's basically Ivory Coast and Ghana are the top two. Ivory Coast is something like 43%, Ghana another 16%. Ecuador, Cameroon, and Nigeria kind of round out the top five. So a lot of sub-Saharan African exposure for this, and that's because you need very, very specific weather conditions in order to grow cacao trees. You need uniform temperatures, you need high humidity, you need a lot of rain, you need a lot of nitrogen-rich soil. Wind is not a great sort of thing. So there's a very limited amount, or a limited number of places, I should say, in the world where you can grow the raw cacao beans. That's why Switzerland. You may think of the Swiss as being chocolate, monopolists, but you can't grow a cacao tree in Switzerland. It's not going to work. You have to grow it in parts of these regions. And so Ivory Coast and Ghana have really specialized in on them. And I think for me, at the geopolitical level, the interesting thing that I found was that in May, the Ivory Coast and Ghana started this new thing called the Ivory Coast Ghana Cocoa Initiative. And they started it to try and increase the premium that purchases of cocoa have to pay to the farmers in Ivory Coast and Ghana. So according to the World Bank, farmers only get 5 to 7% of the profits. It's the people who take the raw beans and then make them into chocolate or these other things that actually get most of the benefit. And it seems like Ivory Coast and Ghana are looking at each other and saying, okay, we're not in this sort of free trade globalization world anymore, and we haven't profited that much from specializing in this cash crop anyway. We're dependent on foreign imports of food from the Ukraine and from Russia, from Ukraine and from Russia. And we're getting hit by inflation and rising food costs while we're producing this cash crop that the profit isn't actually going to our farmers. So I think it's an interesting thing to look at two countries that are used to sort of being stepped on and saying, no, actually, we're going to charge you a premium for buying from us. And I think that can lift the price. The other thing is, if you look at sort of the latest monthly reports from the International Cocoa Organization, there's an ominous line in there about how deliveries have not been quite what people were expecting. And they have this line about how, there's no bottlenecks in the countries. There's no political disruption, despite some of the things that are going on in Ghana, that is affecting the actual cocoa growing regions. So this must have something to do with agricultural practices or maybe bad weather. Something else has to be going on that is preventing these things from getting to market. And they sort of conclude blithely, no, this probably means that probably demand is going to exceed supply by the end of the year. And to your point, I don't think the market is quite pricing that in. People are unsure about whether are people going to stop buying chocolate because of recession needs. What is this new sort of market dynamic with Ivory Coast and Ghana flexing their muscles a little bit and being a little more protectionist going to mean for importing? The other part of this is that, I don't know if you knew this, the European Union is the top importer of cacao beans in the world. Something like 60% of all imports go to Europe. And they've already reached a deal with Ivory Coast and Ghana saying, okay, like we're cool with sustainable farming. This goes with all of our green initiatives and us being better players and rule of law. So we'll shake your hands and we'll have this deal. So if the top importer is playing along with their initiative, well, suddenly forget about the supply and demand. The politics is telling you you're going to have higher prices anyway. So it's an interesting story. It sort of gets to what the slow unraveling of the logic of globalization looks like for a very, very specific supply chain on a very, very specific and idiosyncratic commodity. I think you could apply this in a lot of different ways to a lot of different things. But where I sit today, I think it validates this idea, at least on that leg of the stool, it validates that there are some things happening that should lead to higher prices. The question is whether is demand going to drop off because of recession fears? Because I could be right about everything I just said, and if demand is decreased because people aren't going to buy chocolate, like none of it actually works. But to your point, I think the odds of that are not great. Usually, people buy more chocolate when they're sad, not less. So.
Well, from my experience observing my wife working on her PhD, higher stress equates to higher chocolate consumption. So it could be a anti-cyclical asset in some ways.
No, I think so. But I'm really curious to see if Ivory Coast and Ghana, if this works for them, because one of the things I drone on about constantly is that one of the reasons we're in the current food price situation that we're in globally is because a lot of these sub-Saharan African countries are not growing crops to feed themselves. They've become these places where cash crops are grown so that all of us can eat these foods cheaply. And that's great for us if we want to buy cheap chocolate. But if you actually want a more sustainable food system, first of all, they need to get the best technology and fertilizer and modern practices in some of these farms. But second of all, it can't just be like cash crops forever in Ivory Coast, because besides all the issues that I just talked about, it's terrible for the environment, the way that they've been doing things recently and the way like climate change models are looking like they're going to affect these parts of Africa. Like, the more profit you wring out from the ground now, the less there's going to be going forward, and you'll have long-term shortages going forward. And this is one thing, like climate change might be good in the net for a place like, the northern part of the United States or Russia. I guarantee you it's not going to be so good that they're growing cacao trees there. I would bet good money that like Wisconsin will not be planting cacao trees in my lifetime. So yeah.
And what do you think just on the European demand aspect? I think this is an interesting theme, this notion of signing up to higher standards, environmental standards, social standards, that sort of thing. Because we saw something similar with palm oil, if I remember correctly. And that's been a major point of contention with Indonesia, right? Where Europe has demanded, changes to certain environmental practices that are very destructive, and they have a lot of market power. So do you think that that's a factor to think about more broadly in areas where Europe does represent a big proportion of demand for some of these sort of environmentally, not destructive, but environmentally questionable commodities?
I mean, yes, but this is why the Brazilians told the French this week to go fuck themselves, because a lot of countries don't like to sign up for these initiatives, especially from the European colonizers. They don't like being lectured about what is good from a moral and principled basis from the continent that has. I'm not one of these people who blames all of the problems on the colonial environment, but there was a framework there that set a lot of these countries off on the wrong foot in a lot of different ways, and the memories of that are kind of still there. That said, if you want access to the European market, like that's why the European Union is so powerful. It has its problems, but it is a massive economy and it has certain rules and standards. Those rules and standards can easily be lampooned. I mean, Boris Johnson has a political career because he started his career, penning articles about EU rules about the amount of bend in cucumbers and bananas that could be imported into the EU. I think it turned out that none of those regulations were true. He just found a story about them and made them up. But it doesn't matter either way. I'm just saying you can lampoon the Europeans for this, but it's also a major aspect of their soft power. And it's why we shouldn't just be talking about the United States and China in the geopolitical landscape over the next 10 to 15 years, because Europe is there, has its own system, and wants different countries to deal with it in its own way. When people talk about the dollar, for instance, as a reserve currency, they're always talking about, oh my God, the yuan's going to take over. The Chinese are going to start buying their oil in yuan. It's going to be the petro yuan. They don't talk about how the euro has already outclassed the dollar in terms of the primary means of exchange in parts of Western Africa, because that's where Europe is looking and trying to build relationships, because the resources that they need that they're not getting from Russia anymore. They've been looking for that for a while now. So no, I think it's highly relevant. I think the big problem for Europe will be they're going to have to be a little more flexible. Like Brussels has a tendency of thinking everything is just bureaucratic, sign this paper, do this particular thing, and they're going to have to make deals and arrangements that reflect sort of real-time things rather than just whatever sounds good in Brussels. But if they can make that shift and if they can continue to work on a united basis, Europe has a major role to play. And this is also why when I give talks or when I do presentations about a multipolar world, I usually put up a map of proposed different blocks. It's also why groups like the Trans-Pacific Partnership or different alignments of sort of middle powers, if they could combine together, are interesting, because they might have rules and technology and all sorts of things in their own blocks as well. So I went off on a little bit of a tangent, but yes, I think it's critical for Europe's future. It's critical for thinking about what the global map of the world looks like. And it's yet another reason to be bullish on Europe, that they're out there doing these sorts of things. It's very easy to say, oh my God, the Russians stopped exporting natural gas to Europe. Okay, it's going to cause problems. But look at Europe, being at the front lines, working with the Ivory Coast and Ghana on how to ensure, cocoa imports for the long haul. That's a serious power that's thinking long term.
I thought it was striking, too, that I don't know if you saw in the same speech, Guedes of Brazil pointed out, 20 years ago, our trade with France was the same as our trade with China. And now our trade with China is literally 20 times more, something crazy like that. In that case, you can afford to be annoyed with France, but I somehow doubt that the Ivory Coast is going to be telling France to go fuck itself anytime soon.
No, it won't. But he's wrong when he blames. Well, he's not wrong. I get what he's saying, but that's bad for Brazil, because what happened. One of the reasons Mercosur is falling apart is because all the South American states, instead of looking towards Brazil as the center of the continent, just wanted to sell their commodities on the cheap to China, and China was just absorbing them. So that's nice that you can say, oh yes, China, more important, we sell our products there. If we're still here in 20 years from now and Brazil's economy is still run by how much China's importing of their commodities, then Brazil is screwed. Then they haven't done the things that they needed to do to become more of a regional power and validate some of the things we talk about here on this podcast that is so bullish about Brazil. So in some ways, I've always said it's places like South America that bore the brunt in some ways of globalization, because in the United States, people lost their jobs, but we also got access to cheap goods. These South American economies basically had to hitch their entire economies to Chinese real estate demand to bring it back to where we started. So if China's real estate demand is going to start falling and China's demographics are going to start falling, well, then, hey, Brazil, you've already hit peak China. Maybe you shouldn't be telling France to go fuck itself. Maybe you should be thinking about, how do I have better relations with Europe? So they'll transfer some IP here so I can manufacture better things here and trade market access for this, that, and the other thing. So that's a short-sighted insult, if that's what he said. I didn't get that far in the interview.
Well, shall we call it quits?
Yeah, we've probably given the listeners enough. So, yeah. I guess that's it. We'll see y'all later. Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.